Now to concerns about the oil markets after Russia said it's planning to cut oil production by 5% next month. This represents roughly 500,000 barrels per day and comes in response to recent Western price caps on Russian crude following its invasion of Ukraine. For more on this, we want to bring in Stanley Reed. He is an energy writer for the New York Times. Good morning. Thanks so much for making time.
Good morning. Thank you.
So I want to start with asking you what impact you expect those cuts to have on gas prices for Americans.
I think at this point, relatively little, because the market is pretty well supplied. And if you look at the big global picture, this is only about 0.5% of overall supplies. So probably at this point, not that much.
Is the government doing enough then to stabilize prices at the moment?
I think the U.S. government has done a lot in terms of the SPR, the strategic reserve releases and that sort of thing to keep prices, relatively moderate after there was a big run up, right after the invasion. What this does show, I think, is that the various sanctions against Russia are beginning to have some impact. They didn't have much impact last year, partly because the U.S. has been and Europe have been quite careful not to try to dry up Russian oil because they didn't want to hurt their own economies and other economies.
Right. Can you speak more about why we saw those huge spikes in the price of gas last summer and why you think things might go differently this year?
Well, I think there was a lot of concern after the invasion that there would somehow be a cutoff of oil from Russia. Russia is one of the world's most important energy exporters, and so anything that happens affecting Russia concerns the markets. But then after that, I think the markets calmed down. A lot of oil was released onto the market by the U.S. and others. And also you had a very, relatively weak world economy. China, which is the biggest oil importer, had its sort of worst year in terms of oil consumption in 40 years. So all that kind of tamped things down. This year is still somewhat unknown. China's coming back. The group known as OPEC is still keeping things fairly tight. So it all kind of depends on the world economy, China, what OPEC does, what happens over the next few months.
Yeah, and I wonder if you can talk about, Stanley, what this fluctuation in prices since the war happened in Ukraine really says about America's dependence on outside oil.
Well, America's dependent on, world prices to a great extent, but the U.S. is also a very big oil and also natural gas producer. Here, where I live in Europe, we've had tremendous increases in the price of natural gas, which has also increased electric power prices, and I think the U.S. has been largely shielded from that phenomenon.
Are you expecting more sanctions?
I think they have a lot of sanctions in place now. The question is whether they want to tighten them. I mean, what Russia has been able to do, Russia has lost its main customer, which is Europe. And what they've been able to do is send more oil to India in particular and to China. I think the question is whether the U.S. And Europe try to put more pressure on Russia, in the coming months.
Right. A very fluid situation, lots to follow. Stanley, thanks so much for your time.
Thank you.